In my opinion, it's inaccurate to view the current market as solely a bull market for gold or silver. Rather, it's more appropriate to understand it as a bear market for the dollar, as evidenced by its declining purchasing power over time when measured against gold and silver. This depreciation of the dollar is the overarching narrative, with the rising prices of gold and silver serving as a reflection of this phenomenon. The U.S., in particular, is contributing to the weakening of the dollar to a significant extent, which has ramifications for other countries since the dollar is the reserve currency for many other currencies worldwide. Although other countries may be engaging in similar practices to a lesser degree, the destruction of the dollar by the U.S. remains a significant concern for the global economy. The devaluation of the dollar's worth may lead to hyperinflation, which has been predicted for decades as a result of the devaluation of fiat currency. The rise in commodity prices is an indication of the declining value of the dollar when measured against them. China's decision to stockpile commodities instead of dollars suggests that they have deemed the latter to be worthless. This situation presents a practical solution to the dilemma at hand. The crucial point to grasp is that once governments initiate the practice of printing money, it becomes a self-perpetuating cycle that ultimately erodes the value of their currencies. The timeline for this inevitable outcome may be a matter of months, and when it occurs, the collapse could be swift and severe. While it is impossible to predict precisely when this collapse will happen, there are factors that may hasten it. For example, the global banking system is exceptionally fragile, and banks within the Eurozone are effectively insolvent. Additionally, there are massive, concealed debts within the Target 2 settlement system, which owes the Bundesbank around 12 trillion euros. This is a disaster waiting to happen. The performance of Chinese banks in the stock market is also concerning, with many of them currently trading at historic lows. There are indications that the entire economic system is fragile and could collapse quickly, causing foreign investors to lose faith in the dollar. As a result, they will demand a higher return on their investments, causing interest rates to rise and ultimately destroying zombie companies and the U.S. government, which relies on borrowing at zero interest rates. This would lead to a decline in the value of the dollar. Gold, on the other hand, may fare better in this situation, as it does yield returns, albeit lower than paper currency. However, a gold bull market can only be killed by raising interest rates to such a degree that speculators have no choice but to switch to dollars. This happened in 1980 to 81 when Volcker raised the Fed funds rate to 19.5%. However, this is unlikely to happen now due to the amount of debt in the system. In the end, the market will always prevail over governments. Those who trust government-managed currency over gold and silver are justified if the government manages the currency responsibly. However, this is not the case today, and gold and silver may be remonetized as paper currencies become increasingly valueless. Without being linked to something by the central banks and treasury departments of governments, cryptocurrencies will lose their purchasing power. Despite the current discussion surrounding cryptocurrencies, such as central bank digital currencies, they are simply another version of fiat currency produced by central banks. While linking to gold is a possibility, it does not appear to be anyone's intention, and it is not mentioned in the literature from the Bank of International Settlements. Therefore, the only option left for a nation will be to use the failed fiat currency in circulation as a means of distributing gold. For instance, let's consider the US dollar, and imagine a scenario where the value of an ounce of gold is $500,000. In this situation, the government would need to fix the dollar's value at that point, or else they would be unable to pay the police. The armed forces and other government expenditures won't be paid if they run out of money. Even politicians' salaries won't be spared. Governments, however, will do whatever it takes to survive, and the only way to do so is by having funds. Some people believe that stabilizing the economy by linking it to gold is the solution. However, those who view gold and silver as merely an investment miss the point. Gold and silver are the people's money. By investing in them, you are protecting yourself against the decline in trust in government-issued currency. It is not advisable to trade gold as an investment. Instead, hold on to it as a form of insurance, which is entirely different from treating it as part of a portfolio. To invest in gold and silver, consider exploring lucrative mining prospects, or purchasing ETFs. However, owning an ETF does not provide physical ownership of the precious metals, and therefore does not qualify as an alternative form of currency to fiat. For true ownership, one must possess the physical metals and view them as a form of currency rather than solely an investment opportunity.